Now, you may be asking, well, why do I even bother with these equities? They're way up and they're way down and they're so, mercurial. What do I do with this? The reason that you want to stay in equities and the reason that we invest a portion of our clients' money in equities is because equities and real estate are the only two asset classes that long-term have beaten, here's the key word, inflation.
Right.
You got to have an answer for inflation. So if you're going to have an answer for inflation, and that's equities, you're going to have some volatility. But volatility is not necessarily a bad thing. Volatility is a price worth paying to stay ahead of inflation. And when you look at the long-term trend of your equity portfolio, it should be the one thing, along with real estate, if you hold real estate, that has kept you ahead of things as far as prices are concerned.
So let's kind of dig into that a little bit before we get on to the rest of the content in today's show. When you talk about why do you need to have an investment that outpaces inflation? Well, the answer is buying power, because eventually, guys, you're going to turn these assets into income in retirement. And you're going to not only do that, but during the course of a potential 20-year retirement, maybe 25-year retirement, you're going to need to increase the income you receive in day one later in that time span. So you've got to remain, even in retirement, with a portion of your assets, Tim, invested in equities.
Yeah, when we plan for monthly income. And the monthly income that you're going to get when you retire at 60, 65, whatever the age is, in 10, 15 years, you're going to want more income coming in to really just continue the standard of living you're used to, because it will not buy the same amount of goods as it did 10 or 15 years ago. Yeah. And we see that in all kinds of things now. Gas prices and some things kind of go back and forth, but groceries, I think we've all seen that at the grocery store. That I hear from my wife all the time, you need to go do the shopping if you're going to complain about how much we're spending. So
I hope she's listening today.
She probably will, won't she?
Tell her.
We now know how things roll at the Tim Key household.
It's a show Lori does not want to miss.
It's rough, and I have learned not to say anything about that anymore.
But you just did.
I did on the radio, right? So I've learned not to say it at home. But anyway. Yeah. Things are more expensive everywhere, whether it's cars, whether it's clothes. I mean, it is hard to keep your spending under control. And I know over a period of time, it's just going to get harder. So we have to have pay raises during retirement, just like you get pay raises with your work at your job today.
So how should you respond to those really big inflation numbers that all the talking heads are rattling about? I think we just said it, right? Stay invested in the asset classes that have historically outpaced inflation so that you can increase your buying power when you reach retirement. Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.